Amy Lonardi, how you going?
I am very good, Owen. How are you?
Very good. I'm recording remotely from Sydney today, and you're back home in Melbourne, so hopefully the connection's all right. But what have you been doing lately? What have you been up to?
Oh, well, from a work perspective, it's actually been a pretty busy start of the year, and I've had two clients who have gone out in their first weekend of property inspections and essentially found like their perfect property in that first weekend of inspections. And it's always such an interesting, conversation from there because you have that, fear of, well, what else is out there? I've just started looking, but this is perfect. So, and I'm always very gentle but firm with my advice, saying there's no rush, of course, but let's work through this just in case it's the perfect one. We don't want to have any regrets. So that's been really interesting scenarios with those two clients. And then from a personal perspective, I've actually started to try, it's going to sound maybe a little bit silly, but I'm trying to teach myself how to look after my lawn.
Okay, that's a bit random, but I like it. Tell me more.
Because I have this beautiful garden now, and we've only lived in this house for about a year, and it was all lush and looking amazing and green, and now all of a sudden it's not. It's brown and patchy and uncomfortable. And I've realized, Owen, that you actually have to put effort into these things.
Yeah, you do, Amy. Do you have any pets? Do you have dogs or anything like that?
I've got cats. They don't impact the lawn at all. But I've done in my husband would call it typical Amy fashion. I've gone out and bought an ebook about how to look after a lawn, and I've gone out and bought all the products. So now feel free to follow me on Instagram and follow my lawn journey to try and get this reinvigorated.
I feel like there's some sort of lawn talk or some sort of TikTok equivalent for people that mow their lawns, because there's some of the most popular videos that I've seen.
Owen, I've got a friend who's a lawn influencer. I think he's got nearly 300,000 followers. Lawns in Good Nick. I'll give him a shout out.
Lawns in Good Nick.
Yep, okay. His name is Nick. And hopefully his advice can get me back on track, because it's looking pretty dismal out there at the moment.
Well, that's it's been pretty dry across the country lately, so hopefully that means you've got a nice, lush, green-looking lawn. I got to admit, I'm currently getting our house refinanced through Alcove, obviously Chris's business, and we've spent so much time and effort over the last 3 years fixing the house up, and they came back with the bank came back with like just a desktop valuation, which I'm very not happy with, to be honest with you, and neither is like Ben and the team at Alcove. Because we've done so much to it over the last 3 years. And obviously it costs them a few $100 to order a proper valuation, right?
And a computer doesn't know what you've done to that property, Owen. That's why it's come back.
If you Google our house or you look on real estate or anywhere those portals, it still looks like the same place we bought in 2020. So, which I'm really disappointed about. So we then have to justify and make the case of getting a full valuation done. But what's really frustrating, Amy, is it's been a pretty hot summer and we've got two Groodles and they're on the lawn at the front. Our front lawn is absolutely abysmal. Like it is, we've got big gum trees. I like the gum trees. A lot of people don't, but you combine gum trees with Groodles and you end up with patchy lawn no matter what you do. So I'm going to be really interested in hearing what your book comes back with, because I need all the tips in the world, to be honest.
I'll just give you some, a hot tip here. A valuer will not care about the condition of the lawn. Good. So don't stress about it.
Good.
They really shouldn't be paying attention to that. So yeah,
fingers crossed.
I wouldn't worry too much.
Hopefully they'd take a look at the new driveway and everything else that we've done and the landscaping and the inside and outside. Everything's done. It's just miserable, when you walk in.
You mentioned desktop valuations because, that's, I think, is one of the reasons why when it comes to doing your research, which is all about what this episode is going to be about, is why you can't rely on computers at the moment. I think in the future things are going to dramatically change. It's quite scary. But at the moment you cannot rely on computers or data like in isolation. You have to put a bit of effort into things yourself. And what we're going to explain in this episode too is data is helpful to a certain extent, and data is the what element, but you have to then figure out the why. So data will show you something like a statistic or a snapshot in time or a trend, but then you've got to figure out, well, why is that relevant to what I need to know, and why is that happening? That's the hard part. That's the part that in many instances the internet or just data alone can't give you. You've got to do further research.
No, well said. Well, we've we've got an episode that's all about how to research property like a pro, right? Obviously, you're the pro. I'm going to be the one that kind of prompts you through these steps. And you've broken it down for me in anticipation of today's episode into 3 kind of levels, if you will, being the property market overall, Suburb, and then the property. And I think this is really interesting for me right now because of all the things I just mentioned. I mean, when I was trying to plead my case to be like, well, but our block is flat. It's a hilly suburb, but ours is flat. And this sold over there, but you wouldn't want to live there because of this reason. And, this part of Victoria, all of Melbourne's been a bit, mediocre over the last year, but our area is really sought after. So like, we're going to talk about that and more, but let's start with the kind of the first level, the highest level, the macro level, and just how you use the kind of property market air quotes overall.
Yeah. So we'll break it down into these 3 main categories, and we're going to explain why we want to consider and do research for each of these categories, and also the limitations and the relevance to you as either an investor or a home buyer. And what I will say too is this can seem really overwhelming and or boring when we talk about research, because it just takes you back to like, I don't know, school, doing homework. And you just sometimes feel like, well, where do I start? How do I bring all of this together? And bear in mind, there are people out there whose entire jobs is to do property research. And a lot of economists who do all of this research, and they still can't predict what's going to happen in the future as well. So don't kick yourself too much if you're struggling. But the whole point is to do as much as you can so that you're educated. You go into this with a little bit of insight because it can help you with your decision making throughout the property buying journey, whether that's at the very start, setting up your strategy as an investor, or later on when you're trying to research a local area or figuring out how much that property is worth or knowing what kind of due diligence you need to do. So yes, you need to put a little bit of time and effort into all of this, but at the same time, be wary of overthinking, be wary of analysis paralysis. I've met plenty of clients in the past who do overthink things and just end up not making any decisions at all.
Yeah.
Just be mindful.
I think one of the things is, Amy, if I may, just on this first level, is that a lot of people get overwhelmed at this point because it's like this kind of nebulous idea of like the property market, so to speak. So I'm curious how you use this concept of a property market when most of us know that we buy one property, unless we've got some sort of vast portfolio and we buy many in the same street or whatever. But for most of us, we're buying single property. So how do you use this kind of first concept of what we always hear about each and every single day in the news, the property market? How do you use that to inform you?
Yeah. So this is probably the biggest, I guess, overarching overall, theme, the property market. And it often refers to like the broader macroeconomic market. So for example, what's happening on a national level, what's happening on a state level and a city level to a certain extent. And this market is influenced by these bigger things which are completely outside of your control and my control, anyone else's control. For example, what's happening to interest rates, what's happening to migration, what's happening in terms of the property supply. There are population growth, income growth. There are so many macro elements which are occurring over time, and they have a positive or negative impact on the broader market. And as you might be aware, the market can be national, but it's most generally broken down into states and cities. And then you might say, okay, well, what's happening in Melbourne at the moment in comparison to Perth? But bearing in mind, these are very high-level statistics, and they are helpful to a certain extent when you are a home buyer, because it's good to just understand like the relative strength of the market, what's happening in Melbourne at the moment. Is it a stronger market? Is it flat? Is it going down a little bit? Because it just will help a little bit later when you're making decisions around values of properties and how quickly you have to move, etc. But this is most relevant. This type of data is most relevant for investors. So as an investor, it will help you to figure out, well, which state might you consider investing in, what's happening in that state at the moment, why is it happening there? And it can then help you narrow it down to say, okay, well, at least I've chosen this as a state to look at, this then as a city to look at. What can I purchase from a dwelling perspective, location and size of property within that area now? So you start off broad and work your way down, which can be, easier said than done. And there's a lot of resources that you can go out there, and most of this is free. which is really, really helpful. Actually, Owen, we forgot to mention, at the end of this episode, I'm going to give away like my favorite free resource.
Oh, yes, of course. Yes. And I love it for what it's worth because I used the same resource when I was looking at houses because you told me about it many years ago. So we'll reveal that at the end of the show.
But it's not a secret because
but people who know what the tool is, like,
love it.
Use it every day of their life, like when they're looking for property. So 100%. I was actually just going to ask you about the investor point you made.
Yes.
So like a few years ago on the podcast, a lot of people were writing into us and we get wonderful questions each and every week, as you know, and saying like Perth's the next hot market or this type of thing. Is that, okay, that's a bit like cliched, but like, is that the type of thing that you see a lot of investors kind of using from this level of data? Like this is where can I allocate capital into a market like or a state or a city that might experience growth over the next, say, 3 to 5 years or something like that?
Yeah, that's right. And if you're really, really, really great at doing research, the whole goal of this is to identify an area which hasn't started to grow yet. So you can get in there now, or you can get on the boat while it's still rising. So preemptive getting into that capital growth, because a lot of the time data will just show you what's already happened. And you might then say, okay, well, this place is booming at the moment, but is that going to continue? So for an investor, you want to preempt stuff, but then also it's totally fine to buy into a market as an investor, which is doing really well, as long as then your research suggests that it will continue to do well and the fundamentals are there. So why is that area growing in
like
value?
You said before, yep.
Is it just because it's a hotspot for investors at the moment? A lot of people are flooding into that location and it's just driven, the capital growth is being driven by investors, which is not necessarily long-term and sustainable. So yes, investors will use this higher level data to help them make those decisions about where to buy.
So you're going to mention before some resources that people can use. Pete and Chris, every Sunday on the show, they do talk about, if you listen enough, which obviously I do, there's a lot of consistency in the types of resources and the voices that they're listening to, like the more established voices. So what are some of those, if people want to bookmark them, if people want to follow them on social media or the reports or newsletters or whatever, what are some of those resources that you tend to look for?
Yeah, so the Australian Bureau of Statistics I know it's one of Pete's favourite resources to go to, and you've just got so much data in there to say, what's going on. You can break that down from a macro level right down to a more micro level too. Census data is helpful, but it's really only showing that snapshot in time every 5 years. So it's helpful when it comes out, but again, it just shows what's happened over the last 5 years, and then you've got to investigate, well, why have those things happened? I remember quite a while ago, I was looking at some census data and it showed this part of, I think it was in Geelong, which had this really strong population growth. And population growth is sometimes, though not always, an indicator of capital growth. But when I looked into it further, it was because they had just opened up this essentially this plot of land in that area, built a bunch of new houses, and they'd had a lot of people moving into that location. So even though there was population growth there, the supply of dwellings had also increased significantly. So you've got to break it down much further than that. But the ABS is really great from like looking at demographics, incomes, like the types of people who are living in an area. I also like to use CoreLogic. So they have really great reports. Some free, some you got to.
Sometimes you got to put in your email address and they flick it across to you, which is, to be honest, it's fine because it's an awesome resource. I'm happy to be on their mailing list.
Yeah, exactly. Macrobusiness is another great website, which I think there's a subscription option in there. Profile.id, which is like a demographics website. Yep.
I've never heard of that. Okay.
SQM research as well.
Yep.
It's Pete's blog.
It's actually probably the best, isn't it, to be honest?
It's probably the best because he does all this for you. He'll summarize summarize all of the recent and relevant data that he thinks is applicable to that point of time in the property market. And then finding podcasts which you feel like are reliable resources too. Anyone can start a podcast. Just bear that in mind when you have that. starting to listen to things and just, check their credentials and make sure they know what they're talking about, which I know it can be challenging. And also, this is not just specific property research we're talking about. So just keeping an eye on what's happening in the broader financial markets and, politics as well. There is all of these things have an influence on the property market. And the more you immerse yourself in these things and the more you read and the more you listen to, the more you'll just kind of educate yourself. Because at the start, you don't know what you don't know and you don't know, well, what should I be Googling? Just start listening to stuff, reading stuff, news websites. I love Fear and Greed. Do you listen to that podcast? Yeah. So I listen to that every morning when I'm getting ready for work. And I just think that exposing yourself, especially if you just have no idea where to start, that's the first point, because then from there you can start to say, okay, well, I've listened to this. It's, I'm going to research this particular topic more, for example.
Yeah. It's interesting. It's interesting you say that because like over on our Investors podcast, which is admittedly where I spend most of my time these days, Amy, a lot of what we talk about is directly relevant to the property podcast and vice versa for that matter. People may be aware of this. Maybe some listeners are new to this show and don't know this, but through our investment service, our investment platform, Pete, we actually commissioned Pete to write a monthly update. And it's just like I asked Pete every month, just the 3 macroeconomic indicators that matter. And fortunately for everyone, and that just goes straight to me and the investment team. Fortunately for everyone that's listening to the show, you don't have to pay Pete. You can just tune on to, and Pete's probably like, no, they could probably pay me now. You can just go to use these resources that Amy's talking about, and you can get the intel on what will just keep you informed, and it makes you just feel a little bit more confident. You don't have too much that you feel overwhelmed, but just so you feel confident and informed and you find those trusted resources. Amy, I've got one point for you, which may be the salient point to this, is there are so many data points that are constantly flying at people, right? And you could, like I remember one doomsayer was in COVID was saying properties annualizing down at 32% per year. You can go ahead and Google it if you want to know who that is. And then on the way back up, recently you were saying kind of the complete opposite. And it's just, you couldn't, this is one of the most respected people supposedly in the industry. So you're kind of like, you're at odds and ends with things, which is why it's so good to go back to the data. But my question is this, do you take like the data points or are you looking for like trends or general movements in markets? Does that make sense?
Yeah, so trends are important, because if you're just looking at something at static point in time, what are you comparing it to? So you need to, with the property market, we ideally wanting to see trends and changes over time and then understand why that's happening and then understand, is that going to continue? If I was going to summarize the whole point of this research into one sentence, be wary of opinions, be wary of people's opinions like that, be very wary of the media, because journalists will often call someone, ask them their opinion, they'll quote it, and then all of a sudden that seems like that's a fact. It's just an opinion. And I remember back at the start of 2019, I've actually saved a screenshot of this article. It was ABC. They said property prices in Melbourne are predicted to drop 15% this year, whatever percent it was. And then I've got the same screenshot from the same news source at the end of 2019 saying property prices have increased by 15% this year. The opposite, that was in Melbourne. So just be wary of that. So limitations from a macro data perspective is that, first of all, breaking down whether this is an opinion or a fact and where's this data coming from. And then also understanding, historical performance is not a reliable indicator of future performance. You probably hear that when you
every podcast.
Every podcast.
Yep.
So just because one area has done really well in the past, that doesn't necessarily mean it's going to keep doing well in the future. But at the same time, it also doesn't suggest, I remember talking to some investors a while ago when we were investing in Geelong, and they said, Geelong's already boomed. Is it too late? And I said, well, the reason why it's done so well, those reasons haven't changed. So it's not as if it's too late to get on the boat. You get on the boat if the boat's going to keep rising. So just understanding the trend and again, why it's happening. Will it continue to happen? And then also, frustratingly, statistics aren't always helpful because they are very broad, and we all know that property is not broad, and we're going to have a chat about that in a moment. Once we've researched the broader market, we've got to go to the suburb and then the property itself. And data, for example, it might say, well, Melbourne's doing well, but there are particular suburbs within Melbourne that will be doing better than others. Some are rising, some are decreasing. Townhouses in one suburb might be outperforming houses which are going down. There's so much you then need to break down.
It's actually funny, Amy, you mentioned that. I watched an Alan Kohler thing, really popular journalist that does the ABC show as well as some of the stuff at Eureka Report. There's been a lot of data out over the last 2 years of, we keep using Melbourne as an example, but it's just relevant for this topic. But I remember seeing something recently from him which showed that Brisbane property prices had overtaken Melbourne property prices. But he actually lifted the lid back just one layer, and you get this sense of, oh, actually, it's because Melbourne has a huge number of apartments. And if you just lumped it all together, you'd be like, oh, well, Melbourne's not performing that well. But you peel back that kind of dwelling type, and all of a sudden it exposes the reality can be quite different to that headline.
Absolutely. And I saw that some time ago where it was suggesting that this suburb, where my office is in Fitzroy, had dropped by 20% that quarter. And I read that and I thought, oh, I better start buying some properties in Fitzroy then, because that's a bargain. And I look at the data and they're benchmarking it against like a handful of properties because the supply of houses in that quarter was far lower than the previous quarter. And of course, you're going to get discrepancies in data when you're comparing completely different information. So yes, it can be very, very misleading. And also just bear in mind too that houses versus units, they generally only break them into two categories, houses or units, or houses or apartments. But where do townhouses come into that perspective? And sometimes they'll group them into houses, sometimes into units, because there's no category for them, because then who decides what's a townhouse or not? So I hate to try and then confuse everyone by saying, look at the data, but don't trust the data. But just understand there are a lot of limitations with property data.
Yeah, just be discerning and just try to understand, I guess, as much as you can. Because like obviously in the stock market, if you're used to that sort of market overall, it's very clear what it is. Like it's everyone uses the same rule for every single thing. It's very clear. But when it comes to property, every property is unique and interpretations. There's no official record, so to speak.
That's right. And just to summarize this broader property market example, to come back to home buyers, because this broader market is less important if you're a home buyer. But it is most relevant in terms of tracking the market strength in the area that you're looking at, in particular the suburbs that you're looking at over time, because you do really need to and want to know, is the market increasing in value at the moment? Is it decreasing? Is it staying still? And this broader statistics can help you, can educate you on that information.
Yeah. Okay. And I like that idea that for investors as well, obviously investors are chasing something different, usually an expansion of like the equity and the price of the home so they can redraw and use it in other ways or whatever they've got going on. So that's the first kind of level. And I think
that's the hardest level.
Yeah, I was going to say, Yep. That's probably the one that debunks most of the myths, helps people sort between their sources and just feel a bit more confident in their overall strategy. But if we kind of go down one more level, now we're looking at suburbs, we're looking at areas, maybe it's postcodes, maybe it's beyond that. I'm curious how you frame this level overall, because we've got a bunch of things we want to talk about within this. But then if we go one level deeper, what do you mean by like start researching the suburb? What does that look like to you?
Yeah, so a suburb, you might think of the suburb that you currently live in, Owen, or any other suburb, and you might realize that there are good parts of the suburb, there are not so good parts of the suburb. There are parts of that suburb which have more amenity than others. There might be like super premium streets and then streets which you might not even want to drive down. So a suburb by itself, they are grouped. That's a statistic from like you go to the ABS and they'll group it into a suburb level. But within that suburb, you've got so much discrepancy, and prices and capital growth over time can be very street dependent and amenity dependent and dwelling dependent. And what I mean by that is, as a general rule of thumb, though not always, properties that are closer to the public transport hubs, that are closer to the villages and shopping centres, tend to be more popular, therefore go in value, more expensive. And then in some suburbs, you might have a preferred type of dwelling for that particular demographic. For example, 3-bed houses. And if they built apartments, well, maybe they wouldn't be so popular because people aren't moving to that suburb to buy an apartment. So you have to start then understanding, these more micro elements of a suburb, because later on that will factor in when you're trying to figure out how much a property is worth or why things are selling for what they're selling. Even things like school zones, that can, in some instances, boost a property's value and an area's value. So if you're all of a sudden doing your research and saying, why are these properties selling for more than the ones a few streets away? Well, that could be your answer. And if a school zone is not important to you, and maybe long-term capital growth, yes, it's important, but not your overarching driver, do you want to pay a premium for the same property just because it's in a school zone?
I know out your way, the school zones are very, very important, like towards the inner ring of Melbourne, particularly to the north, and that are very important. But, I was even thinking like of a few coastal areas around New South Wales and even parts of Perth. If you're on the beach, that's vastly different to being one street back. And everyone knows that as like a general gist, but that's obviously the most kind of concrete example we can give to people. Like if you're on Cottesloe on the beach, you're competing with Andrew Twiggy Forrest, who's buying everything that happens to be on that single beach. But if you're a few streets back, it's vastly different. And we just had Australia's most expensive house ever sell in Toorak, Amy, which I'm sure you saw, for $150 million. But I know people that own apartments in Toorak for well under $1 million, right? So that's like just knowing the streets. And I was trying to make this point through Ben at Alcove that like our house, I don't want to pump my own tires too much here, but I had to for the purposes of this reval. We're probably on one of the two nicest streets in our suburb, and everything in between doesn't get enough sun. It's too busy. It's too steep. All these different things. But trying to explain that to the bank is very, very hard. I've found out, and I'm trying to make the case, and unless I plead for it and show comps and these types of things like comparables, I find that really hard. But like you could have written off maybe our entire town because you didn't drive down that street. Does that make sense?
Yeah, no, it really does. And you might be thinking, well, how do I figure all of this out? Where do I even start? How do I research these things? And nothing beats spending time in a suburb. But before you do that, you can start doing some desktop research. So whether you are looking to buy a home or if you're an investor, we start off on the computer because you can sit on the couch and do it at nighttime, have a glass of wine, have a cup of tea. So Google Maps, it sounds really obvious, but spending time on Google Maps and understanding what are the boundaries of this suburb, where's the public transport, where are the villages, where's the shops, where do the buses go, what's the zoning in this area. So you can look on council websites or the resource I'm going to mention later to do zoning. So for example, if you have an area of a suburb which has got a lot of industrial zoning, properties close to that area are going to have lower values, less desirable locations. So starting to map out, where the important things are within that suburb, you can create a custom Google map, which I find really helpful. You can spend some time on Google Street View. It can be a little bit dated, but this is really, really helpful, especially for later on when we're researching a specific property. You might say, wow, that seems to have sold for a cheaper price. Jump on Google Street View, have a look at that street, and there might be a really clear reason as to why that street is not as desirable. For example, if it is a street which does have commercial properties on it or industrial, or if there is an area within that suburb which has quite a bit of social housing, that will have an impact on values. And we're not going to talk about that from a social need perspective. That's a different conversation. But from a property valuation perspective and desirable part of that suburb perspective, it's very, very relevant.
Yeah, it is. I'm reminded of some places where actually I'm reminded because I think when we created the free course or when we first launched the Australian Property Podcast, you were telling me about this. You were showing me that you could effectively create your own Google map and you could create the areas like down to like streets and like re-area. It sounds kind of silly, but like re-area parts of the map. So like, this is my go-to, this is the adjacent part. And I remember that, and I was thinking, because back when I was first researching, I didn't know that was a thing. So I was literally just with a piece of paper, kind of like drawing like out what I wanted. You told me how to create a property brief and do
Get the Melways out, Owen. Just color the Melways in. I had a client do that once. It was really cute.
Yeah, it's a thing, right? So that's kind of a good step, right? So
yes.
At this level, we're looking for areas that kind of I've kind of got sub trends. Let's call it maybe that for the purpose of this part, like sub trends that are like moving in their favor. You mentioned transport. You mentioned zoning. You mentioned even like gentrification. I'm assuming these types of things, cafés, public transport, all that stuff is kind of embodied at this level.
That's right. Exactly right. And furthermore about that custom Google map, that can be really helpful to then start drawing your own boundaries. I often get clients to do this, or I do it for them, where you can create subsections in that map saying, okay, well, this is the target area, and then this is the maybe area, and any other parts of that suburb we're not even looking at. And you can then also take a screenshot of that map and send it to agents when you're starting to look for properties. So we can start off with Google Maps. We're Googling the school zones. We're plotting all of these things, or, at least just being aware of it. And also, in addition, I love to join local Facebook groups. There is no one more interested and passionate about a suburb than the people who live there and the people who are in Facebook groups.
Yes.
So just as a tangible example, I'm in this Facebook group, Mums in Darebin. And Darebin is quite, a big council area. And anytime anyone has a question about, oh, hey, I'm looking to buy a property in this particular part of this suburb, what do you think about it? You'll get 20 or 30 comments telling you what they think about it. And I even had one example where I was in this part of a suburb in Darebin, and there was this really weird smell. Every time I went to that area, I asked the question in the Facebook group, and I found out that smell was coming from an industrial place nearby, and there was a whole community page about this smell. It's just such an invaluable resource. So you can jump on there as well, and you'll get a lot of honest opinions. And then also tapping into local real estate agents. This can be a bit tricky at the start, especially because they're busy. You might not know them yet, just cornering them at open for inspection if they're busy and saying, tell me about the best streets in the suburb might not be the right way. But at some point in time, you might see certain properties in parts of that suburb are selling for more than another part. And you can't figure out why. Ask an agent. Ask a couple just to, cross-check things. But they might say to you, oh, well, that's because it's in a certain school zone. Or that's because these 4 streets are the best streets in the suburb. No one ever sells there. They're very highly prized. So the more you talk to people at this stage, the better. And then also just nothing beats getting out there in the suburb, driving around. You'll just see streets where you're like, this is a really beautiful, great street. And Google Maps isn't necessarily going to convey that. So all of these data points are going to go towards you then understanding that suburb in just intimate detail. And this is, we as buyer's agents, this is our job to understand what parts of the suburb are better than others, because you've got to factor in to your appraisal and also your decision making. Do I want to live in this part of the suburb or not?
I think that's a really good point. Just not to butter your bread too much, Amy, but as a buyer's agent, right, that's what you're paid to do. And I was chatting to some really well-respected people who are in their kind of financial education, let's call it industry and investment industry recently. And they're like really sharp people, really dialed in, already invested in property. And I said to them, because I was talking about property, and I said to them, well, like, what are you looking to buy? These types of things. Like, oh, well, it's investment. I said, oh, okay, where are you looking? They're like, to be honest, I have a rough idea, but I'm going to leave it up to my buyer's agent because they just were too busy, or they just felt like they didn't have, they might have been able to do it, but the actual skill set of going to do that and having then the time to do it is a different thing. So that was really quite interesting. And now we come to the third level, if I'm not mistaken, of our research phase. And this is actually going full micro. So we're not zooming in on the ants that are in the stumps, but we are looking at the property by property basis. So the due diligence, as we've spoken about many times on the show, I think this is the separate episode for that. You previously had a 100-point checklist, and there's your website, which is obviously a treasure trove as well. So Talk to us about this level. We don't need to go, I don't think we need to go super in detail here, Amy, because we could spend 5 episodes on this one thing.
Oh, yeah, absolutely.
But like, what are you looking for as a buyer's agent when it comes to researching the property itself?
Yep. So this is the granular detail at the very end. Once you understand what's going on in the broader market, you've done all your suburb research, that helps you then to say, okay, well, I'm looking in these parts of the suburb and now I've found a property, or you're looking at properties and doing research on a particular property. What do you need to know about it? And why do you need to know these things? It's because it's buyer beware when you're buying a property. It's on you to do all of this due diligence. You want to understand, are there any red flags that could put you off the property straight away? Don't invest any more emotional or financial time into that property. Or are there any issues with that property that you need to factor into your budget or decision making, leaving money aside to do certain works or renovations? Is there a giant apartment block going up nearby? Is it in a bushfire zone? Is there any flooding issues? Essentially anything that then your due diligence prompts you to do further research on. So you know exactly what you're buying. Don't rely on the real estate agent to tell you these things. And even to a certain extent, like your legal rep, your conveyancer, or your lawyer, they'll provide you with as much information as they can. But sometimes you need to ask them questions. For example, saying if it's an apartment, point out which car space is on my title. The agent might have shown you a completely different one. The solicitor doesn't know what the agent said to you and shown you. So it is on you at the end of the day. I know that's scary, but all the more reason to do all of this and to listen to our other episodes on due diligence and what to do specifically.
I actually leased an apartment not too long ago, Amy, and I got the keys and the agent was like, yeah, it comes to the car park, blah, 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 blah. They actually didn't know where that was. Like they actually didn't know what level it was. Is it in that building or this building? Like they literally did not know. I had to go through all the property management to try and figure out which one was actually mine. But that's a whole thing too, right? So you've got to actually take responsibility at this stage and ask the question.
That's right. And most of this research is free and you can do it straight away and you can do it on your computer. So there's no excuse to not do all of this. And I'm just going to run through all of the elements of due diligence. I'm not going to go into detail today, but at the start, you're making sure that property aligns with your brief and non-negotiables, your strategy. You're doing your own appraisal of that property, which fortunately, the way to do this, like the data is all free. It's realestate.com.au and Domain. You look in the sold section, you do this research. If there's undisclosed prices, you call the agent, you put a bit of effort in, and then you're finding like 6 to 10 sold properties to benchmark against. That's a very simple way of saying how to do an appraisal, which is actually a really hard thing to do. You're looking into the local area, zoning overlays, you're looking into local developments, you're calling council, you're looking at previous sold photos of that property to see if anything's been renovated or changed that hasn't been disclosed or might need a permit. What's included in that property, what's on the title. I'm going through these really quickly because this is you're looking at the body corporate minutes, you're trying to call the owner's corporation to have a chat to them, you're speaking to your mortgage broker. All of these steps you have to do and they don't cost you anything. And then at a certain point in time, you might pay for a building inspection, you'll get your contract review, you might pay for some trade quotes. But most of this due diligence can be done straight away, no cost, with free resources.
Yeah. And to be honest, if you're committing to purchasing, let's be real, in Australia, $500,000, $1 million more, it pays. It's not like when you go and put $500 in some stock that you're thinking about, that's really interesting or something like that. This is a real investment. It's not a TV off the shelf. I'm amazed the amount of time people don't do the research that we're just giving away here. Is like, go and do these things. You can follow the rule book on them. When it comes to such a major purchase, I don't say that to scare anyone, but more so just so that you can do it and you should do it because it's your money. So
yeah, and in many cases, we'll do the due diligence on a property and say there's no red flags here. There's nothing wrong with it. There might be a few things we need to bear in mind, but there's been plenty of situations in the last decade I've encountered which have deal breakers, which through the due diligence we've done, we've said we've got to walk away from this property. Imagine not knowing that. We even just a couple of weeks ago, we found a property which had this particularly large block of land for the type of property it was. And I found out that a portion of the backyard was owned by the council. And yet the agent and the agent's conveyancer was saying it was owned by the owner. And, if I went down the path, I did a title check, I spoke to the council and all of that. And imagine someone rocking up to an auction and not knowing that, and then that becoming an issue later. It's quite horrifying.
It's interesting because at the very top of today's show, I've only got a couple more points to go, but at the very top of today's show, you said that you've been helping some clients and you settled really quickly. Oh, no, you settled. You found a property really quickly. And that's really interesting because the emotion from that is like, am I making the right decision? Is this too good to be true? But if you think about it, if you've done all this work, you know what your red flags are. You know what your green flags are. You know like what suburb you're buying. You know how to interpret the market, your long-term property strategy, all these different things.
And on that, those clients, yes, even though we found properties the first weekend of going out to official inspections, I'd probably spent 2 or 3 months giving them homework to do in the meantime, especially one client was from interstate. They weren't even familiar with these suburbs, so I sent them out on the ground work, sending them to relevant places within that suburb. So yes, they had put a lot of research and time in prior so that then when they were officially ready, they were mentally ready as well because they'd done the prep work. And obviously my job is to then do the due diligence for them to make them completely comfortable, to know exactly what they're buying.
So we've gone through like the red flags, which is the easy way to get rid of things. You've got those kind of meaty things that everyone should be looking at with their properties, which we've covered in many episodes before. I'll put links in the show notes to Amy's tools and resources, by the way, but also this. Then the final step you've got here in the notes you sent to me is like the kind of who engage from third parties and that type of thing. So, where do we go from here once we've got to this stage?
Yeah. So during your research phase, you can do a lot of this yourself, but at some point in time, you will need to engage professionals to help you with other things. For example, a mortgage broker who's going to help you reduce risk and understand the loan process, getting a pre-approval. You're going to engage a building inspector, hopefully at some point in time, so that you know, again, what you're buying, any issues with that property, any red flags, and a conveyancer or a solicitor as well to read that contract for you. And again, make sure that you ask them the right questions and point out anything that you expect to be included with that property, what the agents told you, and don't just rely on third parties because, again, all of the risk comes back to you at the end of the day. Not to scare you, Owen, but it's true.
No, but it's not the conveyancer who pays the mortgage, right? So it's really important to make sure you understand that. Now, Amy, you've given us a lot of resources. So we've got like the macro resources. We can use domain and REA to get through to the suburb. We can use data from third parties, but also our own, just getting out there and looking around on the streets, speaking to people, connecting off market, that sort of stuff. Finally, you've got the property by property basis, which again is like, there's some you can do on the computer, red flags, and also just going through your checklist, speaking to people, and then organizing for experts to come in. The next episode, by the way, everyone should say, is about the step-by-step process of property with Pete and Amy. So that's out next week. But you promised us your favorite tool, which thanks to everyone that's watched and listened through to the end, what tool would you suggest people start using and why?
Okay, so there's this website called Land Checker, landchecker.com.au. It is invaluable and it is free. A lot of the parts of the website are free, and then you can pay to get the more advanced parts. But for the sake of today, the free element's enough. And you can look at this from a whole city perspective. It shows you things like zoning, overlays, easement, shows you all of the planning applications in the areas. You can look at high resolution imagery. I'm not sure if that's in the free version or not, but you can also look back in time. That's really useful for me because I've had plenty of situations where I said to an agent, "Oh, when was the extension? Or when was the deck built?" And I said 3 years ago, and I can go back in time and see if it was 3 years or 10 years. So, and the amount of information that's in here is mind-boggling. I just suggest if you're interested in this, jump online, type in the house you live in, have a look at it and click through all of the different tools. There's this part of it where you can type in the address of a property and type in what's within 15 minutes of walking distance, and it'll show you the whole part of the suburb you can walk to within 15 minutes or ride to or drive to. It's fabulous. So that's my hot tip for today, and it's a website I spend almost every day on. And I hope that you enjoy it as much as I do. I'm not affiliated with it at all. I should be because I talk about it that much.
Yeah, so Land Checker, I definitely used it for ours. And in particular, I used it for a house we did not buy, Amy, because I thought this house, it was a few things about it, which probably there was probably two, they weren't red flags. They were like amber or like orange, because one was, it was kind of adjacent to a steep hill, which I was like, oh, you know, cars or even just water coming down. But the second thing was the backyard was so big and it was right in like near town. It was huge. I think it was like 2,900 square and 200 meters from the main street. So it could have been anything in a few years' time. And it was reasonably flat in my area. I live in the hills. So it was like, what's going on here? Well, it turned out straight through the middle of the backyard, like literally cut the back in half, completely up, was this huge easement, this natural easement that just went straight through the middle. And I used Land Checker to check it. And it kind of just showed me the pattern through that property. And, you know, had I bought that, we wouldn't have been able to renovate or extend or do anything on this tiny little house. So just knowing that, it saved me probably hundreds of thousands of dollars, right? So Land Checker, check it out.
There you go.
Cool.
You're welcome.
Yeah. Otherwise, you can head to amylenardi.com.au. It's a link in the show notes as with every week. And you can get in touch with us. There's also a link there to ask questions on the Australian Property Podcast. If you're new to buying a property, if you've got questions, you can send them in to us. We do answer the questions on the show. So whether it's Amy, Pete, Chris, or myself, we love them. So send them in. Amy, this has been heaps of fun. I really appreciate you taking the time to join me.
No worries. See you later, Owen.
Thanks for watching this video on the Rask Network. While you're here, don't forget to like and subscribe so you can get videos each and every day on business, finance, investing, and so much more.